Hello, Group 3. This is Jim Sterninger. Hey, we didn't have any presenters this week, so I thought I would pick up the problem that wasn't assigned, and that was exercise 4-23 in Chapter 4. So at least we have something we'll be able to work off of this week. And I need to practice anyway. So anyway, we have a adjusted trial balance here, and with the adjustments. And the purpose of this problem is to close out the closing entries. Well, it says prepare the closing entries for the temporary accounts at August 31st. And so here's our trial balance for August 31st. So the accounts they want to, the temporary accounts they want to close out are the revenue account, the expense account, the income loss account, and the dividends account. And so we will take the information from here and we will plug them in down here and get our answers. The first thing is revenues. There were two types of revenues. There were service revenue at $32,500. This is usually adjusted numbers. There was rent revenue, and that was at $12,750. You plug those in as debits, and because we're closing this out, it's like everything is backwards that I'm used to. But I'm not sure exactly, why some things go in debit, why they go in credit the way they do here. I'm still trying to figure that out. But anyway. Service revenue, $32,500, rent revenue goes here, and then you create this income summary by adding those two together. So that's how you get a balance here. And then we want to do the same for the expenses, but it's in reverse. So there's no revenues or expenses. So there was 5 types of expenses, and we want to summarize those. So we have the income summary for those. And so we have salary, wage expenses. These are all right here in these areas. And salary, wage expense, $70,000. Supply expense, $1,000. Rent expense, $12,175. Insurance expense, $1,200. Depreciation expense at $1,200. You add all those up, and you get the income summary of $32,575. So now you take that revenue income summary and the expense income summary, and you subtract it, and you end up with your income summary of $12,675, and that becomes part of the retained earnings, and that is $12,675. And the last thing was dividends. So dividends were $2,500. Retained earnings were $5,000. And so the $2,500 for dividends, that would be part of come out of retained earnings. So retained earnings would be $2,500, and dividends would be $2,500. So that's how you close those temporary accounts. And, I'm don't have a lot of confidence in what I'm doing here, but I get the gist of it. There's some whys I don't understand, but if anybody has any tips, tricks, or advice on this, I would be very open to it. And thank you for participating.